Good evening to all of you. This is Ranjan from smartfinancing.com. So this is our website smartfinancing.com. So we are into a research and development domain. So we are a fintech firm. What we do, we develop different courses for capital market as well as we have some unique software for the capital market. So today's this particular presentation is based on a option strategy. So this particular strategy we are going to experience today, and as I said to you, these are the very secret strategies. Nobody will tell you about these strategies. Why nobody will tell you about these strategies? Because these strategies having some secret inside it. So that strategy cannot be told to the many people, because if all will start learning those kind of strategies, then they will start making money, which many of the experienced traders do not like. So that is what they do not want to tell you that. So in my futures and option course, I have just covered near to 22 option strategies, and many are unique in their model. So in my last video, I have just given one such strategy, how you can implement calendar strategy in a different way. So there I have told you calendar strategy can be taken the longest expiry put options and the next longest expiry put options. So using that, you need to take a calendar strategy, that too in put options, so that you can gain from the theta. So today I am also going to give you one such strategy. The secret strategy is like this. You can see here. So this is the strategy I will explain. So before going to this, you can see that we have one call option and put option, both is being bought. So here one is in December, one is in the June, we have nothing in the November. So October we have the expiry on 31st, and I am recording it on the 25th of October. However, I have never taken any options on the November. So I have moved to the December and June 2025, longest expiry. So how this setup is, that I am going to describe, and view this video till the end if you want to really take benefit out of this strategy. These are highly rewarding strategy. You can get excellent profit out of that, and in every 1,000-point move in the Nifty, so you can capitalize either direction. So if Nifty move from this after a 1,000-point plus or minus, you can capitalize near to 400 to 600 points or even more. So this is what the strategy's potentiality is, and this requires some margin of 2,70,000. So this is what it is showing, and other things you can able to test with your broker, because lot size is going to change to 75, so you should have the money to do that. So earlier lot size was 25. So view this video till the end so that you can understand. So we are also running the Diwali offer for all our courses and softwares. So if you are interested, procure the courses and software, which will be highly beneficial for you. So this is one of the strategy which is mentioned in my course on the futures and option. So similar way, many strategies I have explained. So let us move to this strategy. So here theta is a contributor, and I am going to do the strategy's theme is, it is a strangle strategy. However, it is a special strangle. It is not a strangle as you think. So here the definition of strangle says that one trader is buying or selling a call option or put option having the same underlying asset and same expiry date but different strikes. So strangle strategy said that you will be buying a call option and a put option. They will be having a different expiry. One is X means other will be Y, and they will be having in the same expiry say if C is expiring on November 10, then P also expire at November 10. So this is what your strangle strategy says. However, this strangle strategy, if you form, you will have a 50-50 success. 50% time you will get success, 50% time you will not get success. So here people jump from the long strangle to short strangle, short to long, long to short. That jumping used to happen, but they never get success in this strategy. So often theta used to be a killer in this strategy. Since you are buying, theta kills you. So for that, I made a specific arrangement for this strangle, as well as we will be stuffing something inside this strategy so that in future, if there is an adjustment needed, we can able to do that adjustment. So what I did here, I just put a neutral leg here. I am just buying a future of November 75 quantity, selling the future of December 75 quantity. So this is a neutral. Whatever the M2M will come here that M2M will go off. So this neutral strategy I am just inserting in case there is a huge fall happens from now. Then I'll be having some way I should get benefited out of that fall, or I should do a adjustment for a bigger profit. For a bigger profit, I'll be doing one adjustment. So you can see that here, this is the Nifty futures as trading for the November and December. However, our market correction happened from the 26,200 level. It is from the mid of September onwards, or the onwards market has started correcting. So we are almost you can say that 2000 point correction happened. In fact, this has gone much below that. Towards the end, market recovered little bit and closed here. So this is a neutral strategy. You can say this future is meaningless, future has nothing to do. But what is my other legs, that is important. So here what I am doing, I am forming a strangle. However, my strangle is different. I am not taking anything in the November. October 25th I am recording this event. However, I am not buying anything in the November. Straight I am going to the December and I am buying 23,000 call option of December. So which is deep in the money. So 1638 rupees, 1638 rupees. The deep in the money 23,000 call option of December I am buying. And I am choosing a put options, that too also June 25. So here the strangles first rule I am violating, that I am not using the same expiry. One is 26th June 2025 expiry. Another is 26th June 2024 expiry. This is what I am doing. And November is the entire month is left in my hand. And I have also stuffed one future buy and sub future sell, neutral things inside this strategy for my future requirement. If the situation arises, then this can give me a bigger profit. I'll make some adjustment. So have a look on this. So if you just look into the future of December, it is 24,508. That means it is having 1,508 rupees as intrinsic value. So if I can just say that 330 rupees as time value. And if you just see this November future, I am taking at 24,375. So this June, definitely it is in the premium terms. This 25,000 put will be a OTM for the June expiry. However, it is the longest expiry available for us. What will happen in this particular trade once the market move up by 1,000 points? Say market moves up by 1,000 points. Means this future also will rise by 1,000 points, 25,500. This also will rise by 1,000 points. So one will be losing by 1,000 points, another will be rising by 1,000 points. Future will not have any kind of losses here. What could be the other reasons will be here? So once the price goes up, the call option will be having 1,000 rupees escalations here, or 1,000 rupees it will go up. But what will happen to this particular put options? Whether these particular put options will go to zero? No. I have bought the future, bought the call options, which will be rising by 1,000 point. However, since it is a longest date put option, June 2025, if by November, December, this particular put options will never go to the zero. So in case there is a 1,000 point rise from here, the call option will go up by 1,000 points. So since it is deep in the money, that 130 rupees of the time value will be a loss. However, this June put options will never go to zero because it has still the time for a great time is left out. You can say that it will be still trading at 250, 300, 400, something it will be trading. So 1,000 point, if you can add 25,500 level, if it is going to 25,500 level, I will be saying that it will be trading at 300 to 400 rupees. So by the end of November, if there is a 1,000 point rise happen, so the put option will lose near to 560 rupees. However, call option will add 1,000 rupees. So you will be making 600 rupees gain here. And future is just a neutral component. Future has no role here. However, then why we have added this future? I said to you, for some future requirement, what we should do here. Suppose this after rising, we are not finding out any kind of things. However, if there is a correction happen, 1,000 point further correction happened, 2,000 point already happened, say 1,000 point correction happened. So the futures will be offsetting the values. The call options will be losing 1,000 rupees here and it will be at 600 rupees here. But put option will not give you the 1,000 rupees. Put options will be 500 or 600 rupees it will be gained. So if there is a further correction happen by 1,000 point, you can say that you will be having some amount of losses here. What I will suggest here, so put options, you will be having the losses. You can say it will become deep in the money. It will surrender all time values and you will be having, even it can go to the discount because of the June future will be at a great discount. So you can say 1,000 point correction. It is understood that this one has to come to 600 or 500 rupees. However, this particular option will never go to the 1,600 rupees. If there is a 1,000 point correction, it will be hardly some 1,200, 300 rupees. Maximum it will be there, or 200, 250 rupees it will be traded. So 300 to 400 rupees you will be making in the put option. However, 1,000 points you will be losing in the call options. What next? That is very important for me. That is why I have stopped these futures for my future requirement. So there is, in case there is a November, there is a 1,000 point further correction happens. What would be my take here? My take will be, in case there is a rise, I am gaining from the theta. I may not gain theta here. So if there is a 1,000 point correction happens, what I will be doing, I will be bringing this put options down to 24,000. And remaining all other things I will be keeping as it is. June month put options I'll be bringing it to 24,000 level, and I'll just wait for some more time because already 2,000 point correction happened. If there is a further correction of 1,000 to 1,500 point happens, then the net correction will be 3,000 point. I have ample time till December. So I'll be waiting for a small bounce back of a 500 points. So what I can do here, if there is a 500 point of bounce back happens, then I can exponentially grow my money. And not only I will bring these things to the 24K, not only I will bring these things to 24K, I will close this particular future. This should be closed, and this call also should be closed. So this for my future requirement. After a deep fall, if there is a bounce back of 500, 700 point happens, then I will be having a big money I can earn out of this strategy. So if there is a rise happens, nothing to do, there is 400, 500, 1000 point rise happens. So 500 to 600 points I can gain. So there is no doubt about this. If in case there is a further correction of 1000 point, what need to be done? This particular December future need to be closed. This call need to be closed. If you want, you can bring this thing to 24K or hold as it is this one, hold as it is this one, and hold these things and wait for a bounce back of 500 to 700 points plus, then you can reap a great benefit out of that. So this is for this only. I am just stuffing these two futures for my future requirement. Keep testing it. So today, Friday, we are making these things. Monday, once market opens, just punch these prices in a notebook or somewhere. Keep tracking it daily basis and give your feedback if that particular things works properly or not. Thank you very much. Thank you for your time.